Hey everyone, welcome back to Corporate Decoder, the place where we decode the stories hidden inside financial reports. And let me tell you, Intapp's latest filing is quite a story, especially when we dive into how they're really doing financially. Intapp is a big player in the professional services world, offering AI-powered software to top accounting, consulting, investment, banking, and legal firms. They help these firms make smarter decisions and manage their work better, especially with newer AI tools. Intapp is a large accelerated filler, so they have a lot of public company experience. Now they are focused on growth, and a big part of that strategy, as they mention, is capitalizing on the generational change in work driven by AI. They're also looking to move into bigger enterprise clients and expand their existing client base. Let's jump straight into the financials. For the fiscal year ended June 30, 2025, Intapp reported total revenues of $520.5 million. That's a pretty solid increase of 17% from the previous year, when they brought in $430.5 million. The real driver here is their SaaS revenue, which jumped a huge 28% to $331.9 million. This shows their move towards cloud-based subscription services is really paying off. License revenue stayed pretty flat, and professional services even dipped slightly, which is likely part of their strategy to focus more on the sticky recurring SaaS revenue. This revenue growth translated directly into a strong gross profit increase of 22%, reaching $373 million. Their gross margin also improved from 71% to 74%, which is great news. It means they are becoming more efficient at delivering their services compared to their costs. However, growing doesn't come cheap. They ramped up their research and development spending by 21% to 1% to $127 in those AI features they talk about. Sales and marketing also saw a significant increase of 18% to $163.8 million, essential for pushing their growth strategy forward. Despite the revenue and gross profit gains, the company is still operating at a loss. Their operating loss, however, narrowed significantly from $32 2024 to $27.4 to $27.4 million 2025. This is a positive sign showing they are becoming more efficient as they grow. The net loss for the year ended June 30, 2025 was $18.22 million net loss in 2024, and a huge leap from the $69.4 million loss in 2023. They are consistently reducing their losses, which is a good trend. Looking at their cash position, they ended June 2025 with a healthy $313 million and cash equivalents. This is up from $208 previous year, showing they are generating more cash from operations, which was $123.5 million. They also made strategic acquisitions. In April 2025, they acquired Term Sheet LLC for about $51.4 million in cash and stock. They are clearly investing in expanding their capabilities, especially in the real estate sector. They also acquired Delphi GMJ and acquired Transform Data International BV and subsidiaries earlier in the year. This acquisition strategy is a key part of their growth. The impact of these acquisitions is heavily reflected in their goodwill, which jumped from $286 million to $326.3 million. This goodwill represents the premium they paid over the fair value of acquired assets, which is common in tech acquisitions for expected future benefits. Now, one thing to watch is their stock-based compensation. It jumped from $59.9 million 2024 to $88 million 2025. This is a substantial expense and a significant portion of their operating costs. While it's standard for growing tech companies, it does impact profitability. Intapp also highlights several risks. A major one is the impact of data security breaches. If their systems or those of their cloud providers are compromised and client data is lost, stolen, or improperly accessed, it could lead to loss of clients and significant reputational damage. They also acknowledge that if the market for AI solutions in their target industries grows slower than expected, it could hurt their business. This is a key dependency for their future plans. They have significant net operating loss, or NOL, carry forwards. These can be valuable tax assets, but they also mention potential limitations due to ownership changes or tax law changes, which could impact their future tax benefits. That's a bit technical, but essentially it means they might not be able to use all the tax advantages they've banked on if rules change. Customer satisfaction is also a big deal for them. Their ability to sell and renew hinges on the quality of their implementation and support services, not just theirs, but also their partners. If clients aren't happy with the service delivery, it directly impacts future sales and renewals. Now for the stock performance, they explicitly state their stock price has been and may continue to be volatile. This is a direct warning to investors that the stock price can swing wildly due to various factors, including their financial results, competition, and even market sentiment. Looking at the overall picture, Intapp is growing fast. Revenues are up and their net losses are shrinking. Their SaaS business is clearly the engine of growth. However, the increasing stock-based compensation and the reliance on continued market adoption of AI solutions are points to monitor closely. They are making smart strategic acquisitions and their financial discipline is improving with narrower operating losses. For the year ending June 30, 2025, they have about $719.7 million in remaining performance obligations. That's future revenue they've already contracted for, which provides some visibility. Overall, Intapp seems to be on a solid path toward profitability. They are investing in key areas like AI and strategic acquisitions while managing their costs more effectively. The biggest risks are external market acceptance of AI and data security, but their internal operational improvements are encouraging. It's a company playing the long game, focused on adapting to and leading technological shifts in professional services. So what's your take on Intapp's financial health and their AI-driven future? Let me know your thoughts in the comments below. If you found this deep dive valuable, please hit that like button and subscribe for more corporate breakdowns. And remember to join our Discord community, linked in the description for even more insights. Thanks for tuning in to Corporate Decoder. See you next time.